kind of honestly punched me in the face when you and I were going back and forth on this last week, because we think, oh, we're cutting off Russia. They're out of the global markets. We're starving them of money for their war machine. That is sadly not true.
Not yet. Good morning, Brian. Thanks for having me back. Right, this really remarkable statistic from the Friends of Vortexa that are finding that the total seaborne oil exports from Russia, that's crude and refined products together, 5.9 million barrels per day. That is nearly identical to the 12-month average prior to the invasion. So what we're seeing right now is a big reshuffle of those Russian barrels and other barrels around the world. We're not yet seeing a removal of Russian barrels from the market. That may be coming when the EU bans take effect later this year, beginning of next year. But the most remarkable thing that we're seeing in the data is this big swap in the destinations where that Russian oil, particularly crude, is going now compared to before. Before the invasion, almost all of Russia's flagship crude, called Urals, went to Europe, 90%. That's down to like 56% today. On the other hand, Asia, before the invasion, only took a little bit. They only took about 7% of this Russian crude. They're up to 37%. So this is actually a major realignment in world oil flows that we need to keep an eye on going forward.
Shipping costs, obviously a lot lower from either the Baltic or Black Sea ports going to Europe than they are going to India. We can understand that. I mean, but this is stunning data, because there's a perception that we have cut off Russia from global markets. We've cut them off from us, and we've seen the impact. Not quite fully cut off from Europe, but getting there. But India and China to a lesser extent, but India really doesn't seem to care. I mean, they're buying all they can. How long, though, Clay, do you think that Indian buying can go on before they maybe reach max storage, or maybe they are using it all?
Well, I think that they're using a lot of it. India is a really interesting case study because they were taking very little Russian crude before, maybe 30,000 barrels per day. They're up to 600,000 barrels per day. That's what, a 20x increase. And you're right, this flow is wide open. And India is a really interesting case study as well because of the other crude oils that used to supply India more that are getting pushed out because of this massive discount of Russian oil into those Asian markets. So the crudes that are getting pushed out are Atlantic Basin crudes, West Africa, and from the Americas, places like Mexico, places like Texas, and even Canadian oil that's exported via Texas. Those guys are all kind of on the losing side of this trade, whereas oil from the Russian Black Sea and the Russian Baltics to India is really ruling the day.
So we may have inadvertently, not we, but sort of global sanctions from the West may have inadvertently created a big new market and maybe a big new geopolitical friend for Russia in India. Because when you're tied by fossil fuels, those become important and often long-standing relationships.
Well, that's right. And here's the real thing to keep our eye on. As these EU import bans of Russian oil loom toward the end of this year, beginning of next year, keep your eye on how much of that Russian oil begins to go distressed and unbought. That's the key. If the amount that remains unbought is small, I think Putin benefits because he'll still have the war chest, the oil revenues in order to prosecute the war. If the amount is large of Russian oil going unbought, he won't have all those oil revenues. You could even see a split oil market. You could see a bifurcation between Russian, which would be in maybe a massive overhang condition, and the rest of the world where the oil is still on the market. It could be a lot tighter. That raises the prospect of shortages in places like Europe.
Is it quickly, Clay? Is it possible? I know they're selling oil at a discount. We don't know the exact prices. Is it possible, though, Russia's taking in nearly as much, or even more money now than it was a year ago?
On average, it is possible. And the real inflection point will be once those bans take effect. That's really going to tell us the strength of Putin's war chest. Here's the thing, though. There's really difficult trade-offs that are coming later this year that I think you're alluding to, because the policies that are most successful in restraining those revenues and restraining Putin are also the ones that have the prospect of a hard economic landing over here. We have to work out these hard trade-offs.